Thank you, everybody. It's certainly a pleasure to be here in person again after 2 years to tell you about Equinox Gold and how we're building the premier America's gold producer. It's amazing to think that 5 years ago, there was nothing on this map that you see in front of you. And when I was here 2 years ago, we had only 3 projects. Now we've got 7 gold mines and 4 growth projects spread across 4 countries. Of course, lots of forward-looking statements today, so please visit our website and SEDAR for our continuous disclosure documents. I've actually spoken to a number of people today who didn't know about Equinox Gold, so I'm going to start at the beginning. So, very end of 2017, we formed the company, and our first 4 years, we've grown from a single asset developer to a diversified gold producer. Ross Beatty, our chairman and our largest individual shareholder, had recently sold his green energy company, and he wanted to reinvest that money into gold. So Rick Rule gratefully just told us about the case for gold. So Ross at the time thought the gold prices were going to run. At the time, gold was less than $1,200 an ounce, so it's certainly taken off a lot since then at $1,800, but he thought that gold was going to go even higher, and he wanted to build a big gold company, and he wanted to do it quickly. So it had taken Ross about 25 years to build his company, Pan American Silver, from a startup to the world's second largest silver producer. He wanted to do the same thing in gold, and he wanted to do it quickly while both asset and equity prices were still low. Of course, if you want to build a company quickly, the only way to do it is through M&A. If you try to do it through exploration and development, it takes about 40 years to take a project from exploration through to production. So the only way to do it quickly is through M&A. Our first acquisition was at the end of 2018. We bought the Mesquite mine from New Gold. That was our first gold-producing mine. And in 2019, we announced our acquisition of Leagold, which brought 5 new mines to our portfolio. And at the end of 2020, we announced our acquisition of Premier Gold, which brought another gold producer and a big development stage project in Ontario to our portfolio. Along the way, we've also spun out 2 new companies, Solaris Resources and i-80 Gold. We've sold 2 of our smaller mines, and we've had really good exploration success. So in just 4 years, we've gone from a single asset developer to a mid-tier gold producer with 6 producing mines, 1 mine in commissioning, a big construction project in Ontario, and clear path to produce more than 1 million ounces of gold per year, probably by around the year 2025. So with all of our big growth projects in production, you'll see that all of our gold reserves and our gold resources will be spread almost equally between the 4 mining-friendly jurisdictions of Canada, Brazil, Mexico, and the United States. This diversification greatly reduces both geopolitical and asset risk for our shareholders. Our sector is challenging, as we all know. So you can have ups and downs, government changes, rule changes, tax issues, sometimes community issues. So the diversification of having multiple mines in multiple countries was an important part of our strategy. We've got that platform in place now with a nicely balanced portfolio and both production and growth coming from each of those countries. Since we started the company in 2017, we've got a pretty good track record, I think, of value creation. We bought Mesquite in 2018 for about $160 million. It's more than paid itself back with cash flow, and with exploration success, we've more than doubled the mine life at that project. So it's been a fantastic company starter acquisition for us. Aurizona in Brazil was the first mine that we built. So we achieved production there in 2019 on time and on budget with a $160 million price tag. Aurizona has generated close to $250 million in cash flow since then, and we also expect to more than double the mine life at that project by developing additional open pit and underground deposits. We had a number of copper assets that weren't seeing any value in our gold portfolio, so in 2020 we spun them out into a separate company called Solaris Resources, and that has been an incredible success story. We listed Solaris with about a $50 million market cap. It's run by Dan Earl and Richard Wark. Today it's got a $1 billion market cap and is one of the best copper projects in the world down in Ecuador. So it's created great value for its shareholders and also great value for Equinox Gold as a corporate shareholder. And then last year when we acquired Premier Gold, we spun out their Nevada-based gold assets into a separate company called i-80 Gold. We held on to 30% as a corporate investor, and the rest went to shareholders, and the i-80 team is doing a fantastic job down there with exploration success in a partnership with Nevada Gold Mines. And then last month, we sold our Mercedes mine to Bear Creek Mining. We held on to 16% of that as another corporate investment. So we've created value internally by developing our mines and with exploration success. We've created value externally by spinning out or selling our non-core assets, and we intend to continue that track record now with organic growth by advancing our pipeline of development projects. You can see from this slide that the work we've done on the ground and through M&A has translated into significant growth, both in our gold reserves, which have grown from less than 1 million ounces when we started the company to more than 16 million ounces of gold in the ground today, and also production growth. So by basically either buying or building one mine per year, our production has grown from 20,000 ounces in 2018 to 600,000 ounces last year, around 650,000 ounces of gold this year, and then we'll be well over 1 million ounces of gold in the next few years. But it's not growth for growth's sake. Obviously, every transaction we do has to be accretive to our shareholders across a number of metrics, but the most important one to us is a per share basis. So you can see from this chart that we've achieved resource growth, cash flow growth, and also significant production growth on a per share basis. But that big blue bar on the right is the one that's most exciting. So that's the jump that we'll have when we achieve all of our current growth plans. And the reason it jumps so much is because we're fully funded to advance all of the projects in our pipeline. From our existing treasury and with cash flow from our 6 producing mines, at these gold prices, we can achieve all of our growth objectives without issuing any additional equity. And why are we so set on building a big gold producer? I get asked that quite often. It's because the market rewards scale. I already spoke briefly about the benefits of diversification with multiple mines spread across 4 countries, but the market also applies higher premiums to companies of scale. There's no magic to our target of achieving 1 million ounces of gold production per year. It just demonstrates scale, liquidity, strong cash flow, less risk, lower head over costs on a per ounce basis, and more cash flow that's available for shareholder returns. Right now, you can see that Equinox Gold is trading at a significant discount to our peers. We should be trading around that 0.9 multiple along with the other mid-tier producers, and ultimately, when we've achieved our growth objectives, we should be trading right up there with the senior producers. But right now, we're trading at about 0.6 times net asset value. That's partly because we had a setback with one of our projects in Mexico with a couple of community blockades that sort of, I think, rattled investor confidence in that mine. I feel like those issues are behind us now. We've had operating stability since August of last year, but it's certainly close to $1 billion of market cap was knocked out of our share price because of those issues. Of course, the whole market's been hammered, so everybody's down over the last couple of weeks. But then even though we're producing at mid-tier levels with about 650,000 ounces of gold production expected this year, we're basically trading at developer levels. And that's because, as you can see from the right-hand side of this slide, we're going to so much of our net asset value is tied up in future dated growth projects. By advancing these projects, we're going to nearly double our production with 600,000 ounces of incremental production growth over the next few years. And as these projects advance toward production and we demonstrate to the market that we're achieving our development milestones and de-risking these projects, we should be able to reduce that discount and start climbing our way back up to where we should be trading as a mid-tier producer. So we're certainly a bit of a show-me story right now, but I do think it creates an exciting investment opportunity. So even if the gold price doesn't change at all, by advancing these projects and increasing our production, we should see incremental increases to our market valuation. Of course, as production grows, our costs will come down as well. So Santa Luz, I'm going to go back to that chart. Santa Luz, Greenstone, Los Filos, Phase 2, Castle Mountain, those are all really big, long-life, low-cost projects that will add significant annual production and also bring down our all-in sustaining costs, with the ultimate objective when we reach that million-ounce target of having costs in the lower half of the industry average. Our biggest near-term catalysts are going to be achieving commercial production at Santa Luz, which is the mine that we recently built in Brazil, and also achieving construction milestones at our big Greenstone mine in Ontario. So we started Greenstone construction in October of last year. It's 20% complete, it's tracking on time and on budget, and I think having those quarterly construction updates will be an important catalyst for our share price over the coming months. And then, of course, when we achieve production in the first half of 2024, Greenstone will add more than 200,000 ounces of production and significantly decrease our all-in sustaining costs. It's unfortunately been a kind of a bumpy start to the year, but we've created a really solid company in a short period of time, and we've got a really solid balance sheet as well. We've got nearly $500 million of liquidity to fund our growth, nearly $300 million in cash, and $200 million left to draw on our corporate revolver. And then we've got that portfolio of investments with shares in Solaris, I-80, and Bear Creek that are currently worth close to $400 million. So we've got around $850 million of total value available to us, and plus the ongoing cash flow from our producing mines, and we're in a really good place financially and fully funded to achieve all of our growth objectives. The other key thing, I think, is the insider ownership. So all of the executives and directors have personally invested along the way in each of the financings. We hold 8.5% as insider ownership, which is one of the highest profiles in the industry. So we do believe we're building the premier America's gold producer. We've got 7 gold mines in 4 countries, strong cash flow, fully funded to achieve our objectives, and we're well on our way to being that million-ounce, steady-state, dividend-paying producer in the next few years. Thanks for your time. Unfortunately, no time for questions, but we are at booth 217, so come by and visit us. Thanks.